Hey everyone, welcome back to Corporate Decoded, the place where we dive into the guts of public companies and find out what is really going on. And today we're going to talk about Fidelity Advisor Series, specifically their annual report as of the 30th of November 2025. Get ready because we're about to decode some serious financial performance and uncover a few interesting tidbits. First off, let's talk about what this document is. Think of it as a formal report card for investment companies that are registered with the US Securities and Exchange Commission. It is pretty much a deep dive into how these funds performed over the last year. We're looking at a few funds from Fidelity Advisor Series, including the Stock Selector Mid-Cap Fund and their investment objective. They aim to grow your money by investing in mid-sized companies in the US market. Now for the juicy part, what actually moved the needle for this fund. The report paints a picture of a really interesting year for us mid-cap equities. Prices dipped early in the year due to trade tensions, but then bounced back strongly aided by solid company performance, a steady economy, and the Federal Reserve making some interest rate cuts starting in December 2024. The fund actually did pretty well against its benchmark, the S&P Mid-Cap 400 Index. The big wins came from smart choices in what they call security selection, mostly in the consumer discretionary sector. Financials, especially banks and then healthcare and information technology, also helped boost the fund's performance. One of the biggest success stories for the fund was its investment in Howmet Aerospace. This particular stock shot up by about 73%. It was one of their largest holdings and a significant contributor to their relative performance. They also made a massive gain on Western Digital, which was up a staggering 307%. They established this position during the period and it really helped. Another star performer was Coherent, which jumped 57%, and they increased their stake, making it their biggest holding. However, not everything was a home run. The fund lost ground compared to the benchmark due to stock choices in materials, and particularly an underweight in energy. The biggest individual detractor was actually not owning enough of Lumentum Holdings, even though it was up 274%. They also had a bad experience with Baldwin Insurance Group, which dropped 41%. They also mentioned an underweight in Comfort Systems USA, which was up 99%, and that also hurt performance. This indicates a strategy of trying to pick winners, but sometimes missing out on major sectoral gains. This report breaks down performance for different share classes as well. For example, the class of shares had a fund cost of $95 or 0.94% of a $10,000 investment. Let's look at the long-term performance. Over the last 10 years, from the 30th of November 2015 to the 30th of November 2025, a $10,000 investment in Fidelity Advisor Stock Selector Mid-Cap Fund Class A would have grown to $24,565. Compare that to the S&P Mid-Cap 400 Index, which would have turned $10,000 into $26,515, and the S&P 500 Index, which would have made that $10,000 grow to $39,175. Fidelity's fund lagged the benchmarks here. Moving on to the Fidelity Advisor Small Cap Fund. This fund had a tough year for security selection, with healthcare materials and communication services being notable detractors. They missed out on Credo Technology, which was up 263%. Big winners for them were Sterling Infrastructure up 76% and Fabrinet up 94%. Then we have the Fidelity Advisor Value Strategies Fund. This is interesting because they had a great 10-year cumulative performance, with $10,000 growing to $26,522 over the decade. But the last year was a bit rocky. They mentioned security selection as a detractor, especially in industrials, healthcare, and financials. The biggest individual detractor was Acadia Healthcare, which dropped 60%. On the flip side, they did well in information technology and underweight real estate and consumer staples. Top holdings for the Fidelity Advisor Small Cap Fund included First Cash Holdings Inc. and Fabrinet, both around 1.9% of the fund's net assets. For the Value Strategies Fund, Western Digital Corp and Sanders Corp were the top holdings. Across many of these equity funds, the advisor commentary is quite consistent. They point to strong US equity performance bolstered by corporate fundamentals, a resilient economy, and Fed rate cuts. The main differentiator seems to be security selection and sector allocation. For the Fidelity Advisor Stock Selector Mid-Cap Fund, the fund size was $2.2 billion with 207 holdings and a portfolio turnover of 55%. For the Fidelity Advisor Value Strategies Fund, it was also $1.7 billion in size with 112 holdings and a portfolio turnover of 57%. The growth-oriented funds like Fidelity Advisor Series Growth Opportunities Fund had much higher fund sizes and turnovers. Looking at market sectors, industrials dominated the Fidelity Advisor Stock Selector Mid-Cap Fund portfolio at 24.2%, followed by financials at 15.9% and information technology at 14.1%. Value Strategies Fund also leaned heavily into industrials and financials but had a more balanced approach across sectors. The repetitive nature of these reports highlights Fidelity's broad range of offerings. It's clear they have a strategy for many different market segments and investor needs. We've seen a strong focus on stock selection as a key driver of performance for many of these equity funds. Now, looking between the lines, what is my take on this? Fidelity Advisor Series seems to be navigating a complex market environment quite well, with some of their funds outperforming benchmarks due to solid stock picking in specific sectors. However, the lagging performance of some of these funds against broader market indexes over the 10-year cumulative period is something to note. It suggests that while they might have good short-term tactical choices, the longer game might require a different approach or perhaps a bit more luck. Potential investors should really consider their long-term goals and whether the fund's style is the right fit. The high turnover rates on some of these growth-focused funds also signal a more active management style, which can lead to higher costs and potentially greater volatility. Alright, that is our deep dive into Fidelity Advisor Series' latest annual report. What are your thoughts on their performance and strategies, especially compared to the benchmarks? Let me know in the comments below. If you found this breakdown helpful, do give this video a thumbs up and subscribe to Corporate Decoder for more from the world of finance. Don't forget to join our Discord community, linked in the description below, for ongoing discussions and insights. Thanks for watching. Until next time.